Usually I'm kind of looking at taxes first. Is there anything that I can do to help them with tax planning? And so some of the tax strategies that I initially look at is something like their employer sponsored retirement plan. If they're in California, they're pretty much required to have something, whether it's a 401k plan, Cal Savers, what have you. But there are other reasons to get it other than fulfilling a mandate, right? There's some tax benefits to that. Are they maxing out the 401k plan or the defined benefit plan, whatever it is? There's also tax credits that are now available through the Secure Act 2.0. A lot of business owners aren't even aware of. So there's incentive for people to be looking at these types of programs for their employees and for themselves. If they have a spouse working in the business, or if they don't, maybe asking the question to their CPA or attorney, why isn't the spouse added to the business, or can we add the spouse onto the payroll? And if
Yeah.
the spouse is on payroll, are we maxing out her or their retirement benefit?
Retirement. Yeah. Yeah.
Right? HSAs is a different one. Health savings accounts. I think this year the max is 8,300. It's a full tax deduction. I like to use those as well. In certain years, oil drilling funds can be opportunistic for people who have extraordinary high income years. For charitably inclined individuals, donor advised funds, and the list goes on. But those are some of the initial things I look at. And then other things that are not so direct, could be low hanging fruit, if you will, is by asking questions about their taxes. Usually we're getting their CPA involved. A lot of times I'm finding that we have to upgrade their CPA.
Oh, yeah. The CPA isn't quite what the business now needs.
Exactly. Maybe they started off with somebody who was a friend or neighbor, and now they've just outgrown that
Sure.
individual. There's multiple partners looking at a succession plan, making sure that's in place. Estate planning is obviously something that I consider low hanging fruit in the terms of providing value, because as you know, you probably run into people who tell you I should have done this years ago and are just getting this done. And then another one, last one, is something like making sure they have the adequate insurance. We don't handle a lot of insurance, but things like long-term care, for example, if they're a C corporation, they can deduct 100% of the premiums, and these premiums can be expensive. Some of them even allow you to pay upfront for them. So strategically, if there's a business owner who's thinking about retiring in the next year or two, they could adopt a plan like this and get a pretty significant tax deduction for having a benefit that they're going to use for themselves anyways.
Thank you for joining us today for another episode of Absolute Trust Talk Live. If you enjoyed listening in, then don't forget to subscribe. You can find us on Apple Podcasts or wherever you may listen by searching Absolute Trust Talk. While you're there, we would also love for you to leave us a review. And then why not share your favorite episodes with family, friends, or colleagues too? You can find all of our shows and corresponding show notes by visiting absolutetrustcounsel.com. You'll also find a variety of other free resources, including our ebooks, videos, blogs, presentations, and more. If you need help with your estate planning or administration, we also offer a free discovery call to help get the process started. You can find more information on booking your session by visiting absolutetrustcounsel.com/scheduling. Don't forget to keep an eye out for our next live episode. If you join us for the broadcast, you can submit questions during the show. But if not, don't worry. You can always get in touch with us by sending a quick message to info@absolutetrustcounsel.com. Thanks again for listening. We'll see you soon.